My name is Ryan Stillwell. I am the owner here at Stillwell Risk Partners. We are a commercial insurance and risk management firm. One of the things we specialize in is workers' compensation. And what I wanted to do today is, just talking about basics a little bit, go into a little bit of detail about how to read the rating section of your workers' comp policy. So this is a sample policy. It's an actual legitimate policy that's in place here, but the name of the client will remain anonymous. But it's a really good example of how to understand the costs of your insurance policy, specifically for the workers' comp. So I've explained in another video how the basics of the policy is rated with payroll, and you can see that example here. This particular client is a bar and restaurant. They do more liquor sales than food sales, so they're classified as bar. And this is in Pennsylvania. So the class codes might be a little bit different if you're in a different state. Pennsylvania and Delaware share a unique class code system as compared to the rest of the country. But you can see here, you have the bar class code, right? And it shows the class code and the description. We also have a clerical office description here for a separate class code. And you can see remuneration, right? And this is another word for payroll, right? So this is the estimated payroll for the year. And these are the rates per $100 of payroll. So you can see here, the rate is 0.79 for the bar and 0.08 per $100 of payroll. So effectively it's a percent, right? You take this times 0.79%, and you're going to get this calculation of 8,690, right? And that's your base premium, right? You multiply the payroll by the respective class code, you get your base premium for that class code, you add those together, and that is your base premium for the policy. Now, there are some additional factors, right? Those factors include this section down here, and you can see there's a fairly long list of them. We'll just kind of go from the top, and I'll go into some detail. At least the detail where it's relevant. We'll gloss over some fairly straightforward stuff. So these two codes, increased coverage 2 and balance to minimum premium coverage 2. So for this particular client, we upgraded their employer's liability limits from the base $100,000 in coverage for any accident or injury per employee to $1 million for any single accident, for any single injury or illness to a single employee. Right. And you can see here, the cost for that is not very expensive, right? And it's $122. It actually doesn't even cover the minimum charge for adding that. So it's $150 per year. And you can see what a small percentage of your total cost is for adding and increasing your coverage. So it's almost a no-brainer to do so. So that's the charge for that. The next line item here is the experience modification rate. So I'm going to do a whole separate video on the experience modification rate and how that's calculated, how it works, and how it really affects your premium. But you can see here that this rate of 1.736 is adding an additional $6,500 in premium. So why is that? Why is this experience modification rate 1.736? So just kind of real baseline education about the experience modification rate. It is a unique rate to every single business, right? So if you have 3 businesses with 3 different EINs, you're going to have potentially 3 different experience modification rates for each of those businesses, right? And now there's some exceptions to that if there's common ownership between those 3, but if they're 3 separate businesses and they have those businesses all have separate EINs, you're going to get a unique experience modification rate as long as you qualify for one. You can see here that this is basically a 74% debit to the insurance policy, right? So your base premium, and then you add in that 1.736, you just multiply that number by 1.736, and you're going to get that $6,500, and that's an additional premium for the year. So why is this so expensive? The experience modification rate is based upon a 3-year rolling history of claims. So they don't count the year the first prior to the existing policy term, because the data is not correlated and collected yet and verified. So what they do is not the previous year, but the 3 years prior. So if your policy renewed on January 1st, 2023, the policy term you had for 2022 is not going to count toward your experience modification rate, but the 3 years prior, so 2021, 2020, and 2019. So any claims that you've suffered, or that your injuries have had, or that your employees have suffered injuries during those 3 years is likely to affect this. Medical expense only claims, like if there's somebody cuts their finger and has to go get stitches, do not really affect this number. The things that really affect this number are if an employee misses time from work, especially for an extended period of time. You know, if they're out for a week, it's going to be a pretty minor charge for that. But if they're out for 3 months, you're going to hit that cap threshold. You're going to get the maximum effect of this. For any single claim, and these are relevant for Pennsylvania. There are different rules in different states about how these are calculated, but most of our clients here are in Pennsylvania. And in Pennsylvania, the most that your experience modification rate can go up in any 1 year for any one single accident or injury is 0.25. So if you started out at 1.0 and you had somebody miss 3 months from work and you're hitting that maximum threshold, you would then go to a 1.25. It'll probably increase after that the following years, right? And remember, it follows you for 3 years, and at the 3rd year is going to have when its most significant impact is. The next line item here is you can see scheduled debit. Sometimes this may not appear at all. Sometimes it will show up as a scheduled credit, and this is really an underwriting factor. So when you look at this, right, you can see a 0.22 as a scheduled debit. So a debit is an additional premium. A credit would be a reduction in premium. This rate right here for bars is pretty much as good as you can get for a bar for that class code. This rate of 0.79 in Pennsylvania is pretty much as good as you can get, which is impressive that we're able to get that for somebody that's had some significant losses. But part of what the insurance company does to kind of offset that pricing is they have some leeway, plus 25%, minus 25%. Again, this is in Pennsylvania for baseline rating. So because we were able to get such a good rate, they kind of offset that by a scheduled debit. And that's something we can manage going forward. But you can see here that combined with the experience modification rate, you're looking at almost a $10,000 additional premium for what was essentially one claim. Right, there was one significant claim, and it cost them $10,000 in the 3rd year. It cost them. We actually were able to reduce their pricing this year, which was surprising, but it cost them a lot of money in the past 2 years as well. So if they had a clean record of no injuries, this would be a net benefit. You'd probably see it at like a 0.8 or 0.85, which would then be a 15. Let's call it just nice round numbers, maybe a $1,000 credit instead of a $6,500 debit. Right, so that's $7,500, and then you're probably not getting the scheduled debit on here, and we can just wipe that out, right? So talking about $7,500 plus an extra $3,000, you're probably saving close to $10,000 instead of paying more than $10,000. So you can see how this experience modification rate really has an impact on your pricing. A couple other things to really go over here is we've got the premium discount, which is, again, it differs by state, but this is based on the size of premium you're paying. So when you pay a certain amount of premium, the way the state mandates policies be written, you're eligible for a premium size discount. So you can see that they're paying $1,500 less because of how much they're paying. You have the expense constant, and it's best to consider this like a policy fee. It's flat. Different insurance companies charge different amounts, but generally what you're going to see is 160 is pretty standard. Sometimes you'll see it go up to maybe like 280. And again, that can vary by state and by company, but that's a flat policy fee, so it doesn't change based on your payroll. You've got 2 additional premiums here, and this is going to show up in different ways in different states, but in Pennsylvania, this is terrorism premium, which is 3% of your payroll, and catastrophic premium, which is 2% of your payroll. Now, these are state mandated charges as well. They are set by the workers' comp authority in the state as to what these charges are, and everybody pays them. This is based on payroll. So this is not something that ever gets adjusted from one company to the next. It's state rated. And the same thing for the employer assessment. This is a tax is what the employer assessment is. And you can see the tax here, again, that's set by the workers' compensation authority in the state. It's based on your premium. So you add up all these factors, right? You start your base premium, you add up all these factors down here through the terrorism and the catastrophe, you take that number and then you add on taxes to it. So the tax is based on premium, where pretty much everything else is based on payroll or, in terms of the rating factors. And obviously the scheduled debit, the experience modification is rated based on your premium as well. So I hope this grants some insight into how you can better understand your workers' comp policy, how it's rated, what can be changed, what can't, what the underwriters look at in terms of your history and how that affects your pricing. As workers' compensation specialists, we work with a wide range of different clients, from people who have just hired their first employee and they're in an office setting where there's very little risk, to contractors who work in heavy construction and have 100 employees or more. There's a lot that we can do from a risk management standpoint for the larger ones, but even still, the smaller accounts where it's less premium, the markets that we have for workers' comp are incredibly competitive, and we can usually find premium savings one way or the other. So if you've never had somebody explain the workers' comp policy to you before, and you found this valuable, maybe you just think you're paying too much and you want to check on that, please feel free to reach out to us. This is the bulk of what we do here is workers' comp related. So, we're happy to help in any way that we can. Again, my name is Ryan Stillwell. I'm with Stillwell Risk Partners, and we help our clients take control of their risk.